It was pretty clear. I mean, we reported last week, the day that they restated earnings, that the deal was highly unlikely to go through. So, not a big surprise. But I think some people might be surprised that, Kellogg stepped up so quickly and made an offer in cash that, on the face of it, looks like a bigger offer. But one thing I should, clear up right away is that it's actually not a bigger offer. And if you look at it on an after-tax basis, the reason why is the deal with Diamond was a spin-off, and basically there would have been no taxes to pay. So even though this is a $2.7 billion offer, P&G won't get quite as much. It's really close. So I think it's a happy ending, though, for P&G.
You can see P&G, the shares are up today. I think they're up almost 5%. I was looking at my numbers earlier. No, they're down.
Kellogg's.
Kellogg's is up.
Kellogg's up 5%.
Yeah. But for Procter & Gamble, I mean...
Which is a little unusual. I mean, usually the buyer suffers.
Right. How anxious was Procter & Gamble to move Pringle, to get this behind them now?
Well, yeah, I mean, you're right. It seems like they moved really quickly, doesn't it? I mean, it was just it was exactly a week ago that we knew that the earnings were going to be restated. I mean, you have to imagine that P&G was looking around for, a backup plan even before this happened. So, yeah, but again, it is really quick. And I think as far as what you're just talking about with the share price reactions, P&G is a $150, $160 billion company. So in the scheme of things, Pringles, was important in a strategic sense because it wanted to focus on consumer product stuff. This is a bigger deal for Kellogg, and this is good for Kellogg because Kellogg is more than half a cereal company. But you can't do cereal in every country around the world, but you can do snacks almost everywhere. So that, along with the cost savings they'll get out of it, makes it look pretty good. So I think that's what's going on.
Yeah, and from Kellogg's perspective, doubling down on the snack business the way they're doing right now, is this a good strategic move for them?
I think it is because. Again, in a lot of the countries where it's trying to grow, like Asia, I think it's tough to do cereal. And, this is also, I think there's quite a bit of overlap.
Is that
with
a cultural thing? Well,
yeah,
why?
yeah. I'm not sure. It's just, people just aren't as into cereal in some places. But snacks, chips
I love cereal. I have cereal every day.
Sugar Pops?
Yeah. But on the other hand, if you look back over the last decade, I mean, Pringles has not been a fantastic business for P&G. I mean, it wasn't just that they wanted to diversify away. It's given them some headaches. I mean, there used to be, it used to have a special appeal, because it was, the only kind of stacked chip out there. But, Frito-Lay came out and matched it, and then there were some pricing issues. So it probably belongs in the hands of a company that wants to pump more resources into it, though.
Yeah.
So
now let's talk about Diamond Foods for a second. We know all the troubles going on with the company.
Yeah.
Where they
You've been writing about this for a while.
Where do they go from here now?
Well, one thing that someone mentioned to me this morning was the possibility that Diamond might sell Kettle, the Kettle Chips company.
That's a good chip.
To Kellogg. It is, agreed.
That's a good chip. And you can see their stock is up 2%, so they're having a good day there.
Wait, is that a reflection on Pringles? Are you?
No, I'm not. I'm not saying that in opposition to a Pringle, but those Kettle Chips, they're tasty. What can I tell you? The savory chips.
Yeah. And I think that combining Pringles with Kettle, as Diamond wanted to do, could make a lot of sense for Kellogg. The thing is, there's such a mess there at Diamond right now. It's not clear that that they're really in a position to do a deal. I mean, they've got shareholder lawsuits and all that kind of thing going on. And you look at Diamond Foods, market cap is $500 million. It looks really small, but they've got another $600 million or so in debt, and then again these shareholder lawsuits. So Diamond itself is not exactly a bite-sized target. I mean, it's complicated.